Good afternoon, ladies and gentlemen. On behalf of Grant Thornton Bharat and my speaker colleagues, I, Krishan Arora, partner, Tax, Finance and Regulatory Services, welcome you all to this insightful discussion on the intricacies surrounding taxation of secondment of employees, whereby we attempt to offer a holistic viewpoint from an overall tax perspective. I shall be your moderator for the session today, taking you through today's discussions as we hear from a panel of tax experts on their views on this important subject. While the concept of seconding employees is not new, recent judicial and legislative developments have brought it to the forefront of discussions among the tax authorities as well as industry leaders, especially MNCs. With businesses expanding globally, secondment has been a prevalent practice to leverage the geographical advantages and specialized skills of employees. Such arrangements typically vary from short-term retainer arrangements to project-based or long-term arrangements, each of them having their own terms and conditions attached and agreed between the overseas and their related Indian entities. From an indirect tax front, the dispute has always been on classification of such arrangements, that is, whether it should be categorized as a contract of service, which is employer-employee relationship, or contract for service, which is taxable as a manpower supply service. While the position was more or less settled under the erstwhile service tax regime, where the larger bench of CSTAT had held such arrangements falling under employee-employer relationships. However, the Honorable Supreme Court, in its recent verdict in the Northern Operating System, holding such arrangements as taxable under service tax, opened up a Pandora box of controversy and litigation, even under GST, where similar positions are borrowed from the earlier service tax regime. Post this ruling, the GST authorities initiated pan-India investigations across multiple taxpayers, specifically the MNCs. Even since the judgment, one or the other development has been underway, and recently the CBIC came up with clarifications on the applicability of the Northern Operating System decision on case-to-case basis. Thus, in turn, it has significant implications even under direct tax laws where employee salary is subject to income tax in India and the secondment employee is construed to be an employee of the Indian entity for all practical purposes. In today's session, my colleagues who are experts in their respective domain shall try to shed light on the evolving landscape, exploring the multifaceted implications from both employer and employee perspective. And hence, our discussion will focus on the impact of the Supreme Court verdict in indirect tax, emerging issues under direct tax, and transfer pricing laws, while also covering the employee taxation to understand the social and immigration aspects, both in home and its parent country. I'm joined by my experienced colleagues in the speaker panel today, each of whom have over 16 to 20 years of experience in their respective domains, having also worked closely looking into and tracking the relevant developments and implications around secondment arrangements. My panel here is Karan Kakkar, who specializes in the gamut of indirect taxes, especially GST advisory, transaction level implications, inbound and outbound advisory and compliance management. Akhil Channa, leading our global mobility solutions with specific focus on employee and expatriate taxation and international secondments. Vijay Jairam, who focuses on tax and regulatory services, focusing on corporate and international tax, inbound, outbound structuring, foreign direct investment and exchange control regulations. And Vishali Mane, our transfer pricing expert, who has got vast experience on complex global planning, documentation, along with relevant compliances and litigation support. Once again, thank you for taking our time, ladies and gentlemen. Please feel free to put out your questions on the speakers during the course of this session in the Q&A chat box in front of your screens. We shall attempt to address them during the course of this session or at the end of the presentation during Q&A if time permits. Else, we shall surely take note and come back to you with our responses post the session. I will now invite my colleague Karan Kakkar to share his thoughts on the developments on this matter of taxability of secondment arrangements from an indirect tax perspective and what could be the potential implications that one should take note of or mindful of in determining the taxability and finalizing any such arrangements. Over to you, Karan.
Thank you, and good afternoon, everyone. Thank you, Krishan, for setting the context, on the secondment arrangements. So typically, I'll again give a overview how the typical secondment arrangement work. The overseas entity deputes the employees to the Indian entity for a specified period, and there is a secondment agreement, which is between these two entities. And for that specified period, the employees work under the direction and control of the Indian company. But also hold the employment, in the foreign entity only primarily for the social benefits what they accrue in those their home countries. However, and how the salary is also structured. The salary is paid by the Indian company. The responsibility of the salary to these expats are on the Indian company. However, for the social security benefits or a part of salary for the administrative convenience, because the families of these employees who come to India stay in their home country, the foreign company pays part of the salary, and they take the reimbursements from the Indian company. So these are typical arrangements, and after the engagement of the specified period is over, these employees go back to their home countries, and that is their wish to go back to their home country and start working there again. So next slide, please. So this is what I've explained on the flowchart on the left-hand side. So I'll quickly move on to how it has panned out for the indirect taxes. So for indirect taxes, we need to really understand, there are different eras where the leviability under these arrangements have been tested. So this arrangement, like Krishan mentioned, that it has always been a matter of very, very close lens before the authorities. It has been litigated in service tax regime also. So in the positive tax regime, only what was taxable was manpower, recruitment, and supply agency services. So which means if any arrangement qualify under this service, only then the service tax was applicable. And this has also been disputed, and there have been various judgments at the tribunal level, at the sested level in the service tax era, where more or less, it was settled position that these secondment arrangements are treated to be employer-employee relationships, and only the payment of salary portions or the social security benefits portion and the reimbursements thereof should not be construed or determinant in determining the nature of the transaction to make it a pure manpower supply. And that was in the negative list regime. Clearly the employee and employer relationship was excluded from the definition of service itself. So which means there was no service if we had proved this arrangement. So now coming to GST, in GST, the same provision has been borrowed. There is a concept or, of that employer and employee relationship would not qualify as goods or services under GST as well. However, if they qualify for any transactions between two related parties, and it is not an employer and employee relationship, which primarily means it could turn out to be a manpower supply or a technical support. In that sense, even if there is no contract or there is no valuation which has been ascribed to those services, those come within the ambit of GST, and they are treated to be supply for GST applicability in India in hands of Indian company under reverse charge mechanism. So that is the background, how it has panned out. And, when I was talking about the SESTAT cases in service tax regime, the famous ones are Volkswagen, computer sciences, all these, rulings have clearly told that the seconded employees work for the Indian company under their supervision, guidance, and directions. The Indian company also comply with the income tax and the provident fund requirements, establishing employer relationship. Hence, it should not be treated to be manpower supply. And the same had been taken by the department as a SLP before the Supreme Court in the Volkswagen and Nissan brake case. However, that was clearly dismissed by the Supreme Court, which affirmed the position which was there, taken by the SESTAT. So now, next slide, please. So now what has happened? Last year, in the case of Northern Operating System, so this is a landmark judgment under, where the Supreme Court had given its ruling. So I'll give you the brief what has happened in this judgment, and then probably we can appreciate that how the settled position under service tax has really got unsettled after so many years. So under Northern Operating Star, the Indian entity provided back-end support services on a cost-plus basis to the foreign company. and the skilled employees or the expats were sent to the Indian company for a specified period. They were sitting on the payroll of the foreign company also, primarily for the social benefits, social security benefits. And the salary was being paid by Indian company as per as per the policy of the foreign company. So that was one of the differential factor in this specific case, that the salary or emoluments were decided by as per the policy of the foreign company and not the Indian company, while the Indian company was primarily responsible for making the payments of salary to these employees. And of course, after the secondment period, the expat had to go back to its home country. So here, what Supreme Court clearly said, that they invoke the principle of substance over form. This is the doctrine which says that whatever is there in the substance, whatever you draw out the employment contract or the secondment arrangements, all that has to be seen holistically. It cannot be just seen, okay, that you just because we are paying salary to somebody, that becomes an employer-employee relationship. So they invoked the substance over form doctrine and differentiated between the contract of service and contract for service. So which means contract of service would be that, okay, this is an employer and employee relationship. There is an engagement letter or the employment letter between Indian company and the expat, and that becomes the driving factor to determine GST applicability. However, in this case, they said, okay, this is not really a contract of service in toto. It should qualify a contract for service because there is a pro quo. So which means the foreign company was deriving the benefits of the expat, which was planted in Indian company in northern operating systems. And the benefits were indirectly or directly being benefited by the foreign company also, which means there was a quid pro quo wherein the foreign company also benefited from this. So coming to the judgment, they held couple of points which were very important, that Indian company could exercise operational and functional control over the seconded only for the limited period for the assigned tasks. So it was not that they could, really have a effective control on this employee for that period. So that was one distinction what they brought. And like I said, employment terms were decided in consonance with the foreign entity policy. There was no Indian policy which decided the salary and the other benefits to this employee. And accordingly, the reimbursements were done by the Indian company also, whatever the portion was paid by the foreign company. The salary allowances were determined by the overseas entities in this case and were paid directly, in their home country. So that was another distinction what brought in. Typically, what we have seen in our experience, all these decisions, all these deciding factors of salary or leave policy or any other policy, all these expat, when they are in India, they adhere to the Indian company's policies, not the foreign company policies. That really gives a demonstration of that, the control supervision is done by the Indian company, and the foreign company really do not hold any, right on that person in for that specified period at least. And also, like I spoke about the principle of quid pro quo, the Supreme Court mentioned that the expats were seconded for specialized services. So Indian company derived not only the benefit of experts from the secondment term, but also economic benefit in form of revenue from to the backend services. So that was one of the very important aspect what Supreme Court brought into light. And of course, the social security benefit, they said that the expat continue to be employee in the payrolls of the foreign company also, be it for social security benefit, which clearly, what they said, that the control of the secondee is not there as such. And of course, on the cessation, the repatriation would happen to the home country. So these were the arguments which were, or the, I would say the areas what the Supreme Court really wanted to distinguish the facts of Northern operating system between contract of service and contract for services. So in this case, the SSE also took the argument of revenue neutrality that, okay, even if I had to pay service tax under reverse charge, I would be eligible for ITC. So Supreme Court also negated that revenue neutrality argument, stating that these two concepts are very different because the time of supply provisions are very different for making the payment. So if you make the payment within time, the ITC is of course allowed. And if you do not make, then there could be penal consequences in terms of interest and penalty on late payment. So that was one area. And of course, the Supreme Court also disregarded, the earlier judgment of Volkswagen, what we spoke about, and the, Allahabad High Court judgment in case of computer sciences, holding it did not hold any precedential value as they lack independent reasoning. So they distinguished the earlier decisions also, especially for northern operating systems. And eventually they concluded that foreign entity contract was for contract for service and would qualify as manpower supply services to Indian company liable to service tax under reverse charge mechanism. So this was the matter in in service tax. However, how it impacts the GST, because like I said in the beginning, GST provisions are almost borrowed for these kind of arrangements from the negative list regime under service tax. So there is a Schedule 3 which talks about exclusion of employer-employee relationships. On the other hand, there are, this decisions had, various ramifications under GST, and which has opened the Pandora box of issues. So I'll be talking about the issues, how it has come. There have been unfavorable pronouncements in case of Dell International, Renault, Nissan Automotive, after, relying on this northern operating systems by the sestats, various, different sestats, stating that service tax will be levied on these secondment arrangements. So which means the sestats have started following it, and we have certainly started seeing the negative rulings which were positive earlier. Under GST, DGGI notices have come to mostly all the assessees where these arrangements exist, and they have demanded show cause notice and the demands to the companies, contending that these secondment arrangements would qualify as manpower supply under GST also, and accordingly GST should be paid by Indian entity. So department has clearly overlooked the factual specifics which were applied in case of northern operating systems, and they have blanketly given all the notices to all the assessees. There is also a valuation dispute which is opened up because of this. Now, when I say valuation, like I said, there are two parts. Whether even the Indian salary component which is paid by the Indian company would be taxed under GST. That's another bone of contention. The other point is that, okay, the entire salary should be taxed, which also includes any reimbursement which are made to a foreign company, or only if at all, somebody has to say that, okay, these are kind of manpower supply services. The valuation should only hit only on the reimbursement portion, which is given by Indian company to the foreign company under reverse charge. So these are, disputed. There has been a high court, stay on the valuation also aspect. So that has to be tracked and seen that how the GST authorities will eventually, take, if at all. And of course, there have been other high courts like Punjab and Haryana High Court, Delhi High Court, Karnataka High Court. They have stayed all the demands on these matters, and they have told that, we will await for the Supreme Court decision, because one of the decisions is also pending before Supreme Court in case of Komatsu. So wherein the taxability under secondment arrangements, will be tested again by the Supreme Court. It's a two-member bench, and tentatively it will be listed in March. So that is something, we need to be tracking, keeping an eye on, because that could distinguish northern operating systems. And in the interim, because all these things were happening, CBIC also came with the, clarification. And, it's clearly stating that NOS decision, which is Northern Operating Systems, cannot be blanketly applied by the authorities. It has to be seen from case to case basis. Each case can be distinguished, from the Northern Operating Systems, and the authority should not frivolously and blindly demand any amount of tax or any penalty on that. On the other hand, there has also been dispute on ITC eligibility where the companies have agreed, to avoid any litigation or to not litigate the matter further. They have agreed to pay for the past period also. In that case, now the department says, okay, we have got the GST for the past period. When I say for past period, from July to 17 onwards, but the ITC will not be available because you have exceeded the time limit which has been prescribed under section 16(4), which says end of November, and erstwhile it used to be October. So that is also stayed by Karnataka High Court in case of Toyota Kirloskar. They have granted the interim stay on denial of ITC on account of limitation of period. So we will have to track this also. Otherwise, it is a double hit to the SSEs. One, they pay GST for the previous period. Second, they are not even allowed ITC. To sum up, the key takeaways, because of these development, I would want to reiterate to all the audiences here is that please revisit all the arrangements, the contractual terms, the tax positions, the documents in light of NOS. Distinguish if at all your cases are distinguishable on the facts of NOS. Follow the circular. If there are any demands to you, say that okay, our case is different to the authorities if they ask and question you on these arrangements. Please track the High Court judgments which are right now at stage, especially in case of ITC denials for the previous periods. So that is one thing. And do determine whether in essence the arrangement really qualifies for employer-employee relationship, or there is a quid pro quo for contract of service and GST is applicable. If it is applicable, please do pay GST, and the credit can be taken depending on the businesses what the respective companies are in. Second, takeaway I would strongly recommend is or suggest is please talk to the wherever the notices have been received asking the demand on such matters. Please consult your lawyers or consultants or anybody on your board to make very robust and strong replies with adequate backups, because this can be long drawn. We will have to wait for the outcome of the Supreme Court, and under GST also there have been lot many stays under high courts. So we will really have to wait and watch unless and until. So that is where a strong recommendation by a professional advice would be there from my side. And the another one is, since there is a demand from the past period, which is from July 2017 onwards, the ITC valuation, should be considered. The strategy, if at all the company wants to litigate in case of any demand, that strategy should be in place. The informed decision should be taken, okay, vis-a-vis the interest meter and the litigation cost and the actual merits on the case. So all these strategies should be drawn. And lastly, what I want to say, please keep an watch on Komatsu India ruling, which is pending, in the month of March which is listed before the Supreme Court for the hearing, where again, they will take up the matter on secondment arrangements, and that could, we are hoping and positively it should be in favor of the, SSEs. If not, then again, we go back to the drawing board and see what needs to be done in our case. Yeah, that's to sum up from GST standpoint. Krishan, back to you.
Thanks, Karan, and thanks for really sharing the overall perspective, giving the background and where the issue stands today. Also, the checkpoints which you mentioned about keeping the documentation, revisiting the documentation, tracking the judicial developments, very important, because some of these things will critically come out and give a feedback in terms of what really needs to be done and how can we distinguish Northern operating system is something which is going to be very important from that perspective. And from that perspective, you talked about the fact that department is running into kind of raising demands against any secondment arrangements. I think one of the important part of the benefit of the circular is that there is an instruction to the department to actually watch and kind of take up those activities. But whatever investigations and audits have been already commenced as when Northern operating system started or before that, I think the stand which probably everybody needs to take is that wait for developments to happen. There is an argument which can be distinguished from which you can distinguish Northern operating systems, and from there, look at the developments and try to kind of reason out to them that they should give them time to kind of get this to that level of conclusion after the rulings come out. Thanks for that. And I'll bring in, while this was from the Indian entity plus the overseas entities perspective, bringing the individual, seconded employees perspective to taxation. And here I'll bring in my colleague, Akhil. Akhil, since you've got extensive experience in handling seconded employees related taxation and social security matters, can you throw some light on the key factors which need to be considered while entering into secondment arrangements?
Yeah, thanks, Kishan. Thanks, Karan, for giving such an overview. And before we start, getting more in detail from employee and employer perspective, let me first take you through and make people understand typical inbound secondment models. Here we are talking about only inbound; we're not talking about outbound. So the screen, the model coming on the screen is a typical inbound model. Where a request is placed from Indian entity to the overseas entity, and the person has been sent on secondment. So there are various factors, which determine, what kind of secondment model a person should come in. There are key factors which I put in here. If a person is coming for a short-term or a long-term assignment, and as we've mentioned, depending upon that, what kind of visa a person should come in, what kind of arrangement, whether payroll should be in the home country, it can be split or it's shifted to the host country, place of payment of salary and benefits, because most of the time people have their, personal obligation in the home country. There are times that people coming on a secondment wants their, payroll should be in the home country itself, continues. And social security benefit, because they don't want to discontinue their social security benefit, though business needs them to be traveling to different part of the world, but they want to continue with the social security benefit in the home country. So there are many factors which define what kind of secondment model a person should come in. Typically, we have seen secondment divided into two parts. One is a short term, one is a long term. We are not talking here about the business travelers. We are not talking here about the permanent transfers. We're just talking about the people who are coming on a secondment for a shorter period of time or a longer period of time. Now moving to the next slide. As you rightly said, why we want to discuss about the taxability both in the hands of employees and employer before we have this, NOS ruling impacting the entire arrangement. See, if we see from a individual perspective, if we deep dive into the certain specific issues, around secondment. First of all, the taxability of employee works purely on the employment, where the employment is exercised, where the place of accrual or receipt of salary, because these are the relevant factors. Where, over the years, multiple, treaties between different countries, multiple, uh, uh, judicial precedents comes around taxability of an individual, talks about where the employment is exercised, receipt of salary becomes important, place of accrual becomes important, and obviously in addition to the residential status of the people. However, with NOS ruling, they've disregarded the concept of employee-employee relationship, as my colleague partner rightly said, that government is going without considering any of the facts. They'll squarely apply this NOS ruling and issuing notices all over, all through the industry at large, asking for huge demands going back from 2017 onwards. But let's look into the more deep dive into the facts, how over the years this government has worked out, and even from a
Sorry to cut you, Akhil. Your voice is not clear. Can you be closer to the system? I think somewhere we are missing some part of your voice. Thanks.
It's better now. Is it better, Kishan?
Yes, now it is. Yes,
Yeah.
please carry on.
So what I was trying to say, in addition to taxability of employee, it's important to see how the employer has to do the withholding, and we've seen a lot of judgments before NOS and after NOS. I just want to talk about that. it is having discussed the employee taxability part, how the payments for salary is stated by various Indian courts and have evolved over the period of time. One is the key judgment which was pronounced in 2009. This is L.I. Lilly. It was a landmark ruling in secondment landscape, if you remember. The Supreme Court held that the Indian company was bound to deduct tax at source under Section 181 from the home salary or any other salary, irrespective of whether it's paid by the foreign company. And any payment of income chargeable in that salary, then TDS provision should attract. So they've given the emphasis to employer-employer relationship. Then there was a judgment which was pronounced in 2014, Centrica. Again, it's affirmed by Supreme Court, though it's a Delhi High Court judgment. Again, it's a landmark ruling, though often considered as a bit controversial. But again, here the concept of employee-employer relationship was bring in, and whatever reimbursement made by an Indian entity to the overseas entity towards salary of secondment employee was taxable in the hand, India's FTS or fee for included services. So we see that before NOS, everything was moving around employee-employer relationship. The secondment was not typically considered as a service and as a manpower, which was discussed in NOS. Similarly, recently, happy to share few more judgments where big relief has been given in the form of, again, considering this fact after NOS, if you see Flipkart, which happened in 2022, the Karnataka High Court held that the reimbursement of salary of secondment employees by Indian entity to host entity is, again, fee for included services. They've given that, they've looked into the facts that the employment contract was issued by Flipkart. Employee reports to the people sitting in India. Even the hire and retire power is how to terminate the services in the hands of the employee. So they've considered Flipkart as an employer. So similarly, if you see Google, which is a Bangalore High Court judgment, or Ernst & Young, which is a Delhi High Court judgment, they again put emphasis back on the employer-employer relationship. So my only thing, if we move to the next slide, if we build up, a view with preserved income tax, provident fund, and immigration law, all are giving emphasis, to employer-employer relationship. Uh, Income tax, we've discussed about it. We've discussed liability. We've discussed various judgment. Even we whenever we talk about a permanent establishment exposure, we talk about service fee getting credit for an foreign employer if the facts are different. So even from an immigration perspective, the requirement is most of the time people on secondments coming in India should come on employment visa rather than business visa or any other project visa for that matter. And even from a provident fund perspective, if you see the social security, obligation comes for Indian entity. And
I think we're losing again. Sorry. Just remind you
yeah,
on that. Yeah, it's better now. Again.
yeah. The social security obligation comes on, Indian entity. These people are considered international workers. They will be considered as an employee. So looking into all these factors together, I think it's important to understand the facts of different secondments. We've talked about the kind of secondments which are happening in India. So the employer has to be cautious, when they're sending their people, and thus NOS should not be squarely applicable to everyone. And uh, as I said, over the years, the Provident Fund law, immigration law, Income Tax Act, they give a lot of importance to employer-employer relationship, and basis that one has to be cautious before planning any secondment for the people coming to India. Now, before I hand it over to you, Krishan, let me call out. Moving to the next slide, please. Yes, let me call out, the crux of the discussion so far, which we've done, whether the service of secondment employee should be treated as an employee-employee relationship or member supply. As my colleague partner Karan also talked about, we have to be very cautious how we are putting it together, whether it should be constituted as a contract of service or contract for service. We've seen the contrasting view between different acts and very interpretation of codes around this relationship. So if you ask me per se, is there any golden rule to frame a secondment structure? My answer would be that there is no such golden rule. Designing a secondment structure is purely a fact-specific exercise where various factors, laws, and documents needs to be tied up to minimize the judicial scrutiny. And if the principles laid down in the landmark judgments are incorporated in a secondment structure, it will provide reasonable degree of cushion from a tax litigation. Some of the key things I've indicated coming on the slide, where which are generally scrutinized by the courts in secondment litigations are employment contract, agreement, master service, intercompany agreements, Form 16 of the secondment employees, which also plays a critical role, both from income tax perspective and PF, and even from a GST perspective, if I'll ask Karen to talk about that, or intercompany invoices. So these are the factors which are given, and there are certain clauses which one needs to be cautious while putting up the secondment contracts, so that it should be considered as a contract of service, not contract for service, and that employee-employee relationship should be built in. And we've seen already that Flipkart, Google, Ernst & Young, a lot of judgments which are coming in favor of the SECs as well, even after the annuals. So this is from my perspective, my experience of handling different type of arrangements, and recently after this NOS, different kind of litigations happening at the client place. Hand it over to you to take this forward. Thank you.
Thanks, Akhil. And I think that you laid out some very important points in terms of how the Northern Operating System judgment, pans out and, kind of digresses from that typical employer-employee relationship and contract of service and contract for service. However, in the other laws, the way you have actually explained the fact that those documentation, etc., continue to can be treated to be employer-employee relationships. However, the checkpoints are that, you need to look at your documentation, stitch it all together. Ultimately, we need to marry all the legislations and judicial interpretations together. But what you mentioned is that if it continues to qualify the employer-employee relationships, then the positions which continue to remain devoid of what is Northern Operating System saying. However, we need to be mindful about the development which will come up in terms of the rulings, especially Komatsu, etc., which will ultimately throw some more light and get more clarity. But what is really needed is for people to understand how they stitch up all of these things together. Thanks, Akhil, for that. I'll bring in my colleague Vijay here from a direct tax standpoint. While we talked about individual taxation, we talked about GST. I think Vijay, the question to you is, what is that interplay between the direct tax regime and indirect tax regime around this issue? What do you see as a significant impact, if there is any?
Sure, Krishan. Let me see how I can answer that. Before I begin, what I'll try to do is, there's a lot that Karan and Akhil have already covered. So I'll focus on the incremental in the interest of all. And maybe let me start with a quick rewind of the story so far from a direct tax perspective. So while things were hunky-dory from an indirect tax perspective up until the apple cart was kind of upset with the Northern Trust ruling, the story wasn't on similar lines for direct tax. It all began with the Centrica ruling by the Delhi High Court way back in 2014. And that set a sort of precedent which said that there could be a potential withholding tax on fees for technical services. So that since then, and subsequently what happened to that, pursuant to that ruling, was that there was a writ that was filed before the Supreme Court, which was summarily dismissed by the Supreme Court. And hence, the law that was expounded in the Centrica case became the law of the land. Post that, over the years, there were both sets of rulings, favorable and unfavorable. In the South, also, there was a mix of favorable and unfavorable. But the rulings until the Northern Trust ruling, the rulings had been mixed. Now, what has happened is that the Northern Trust ruling has come in, which has talked about manpower supply services, as Karan talked about. Now, the question before us is, how does this play out from a direct tax perspective? Now, if you look at what this has said, our direct tax concepts talks about and defines fees for technical services. And this is defined differently from manpower supply services. And that has been expounded in subsequent cases that have come after the Northern Trust ruling as well. Now, Akhil has also explained about contract of service versus contract for service. So the employer-employee relationship is paramount. I'm not getting into further aspects of that. Those have been explained in the earlier slides. So one of the key arguments for a payment not being liable to withholding tax FTS is that this is a salary payment that has been made and tax has already been deducted on that. all that is being done is a cost reimbursement to the overseas entity. So that has been a fundamental plank of a defense against a withholding tax for payments for fees for technical services. But that's not all. There are further defenses that are possible against a fees for technical services argument, and that is that there are treaty concepts which are in play. So when you look at a tax treaty versus a domestic law talks about managerial, technical, and consultancy services under FTAs, but many of the treaties don't have the word managerial. And frequently, what we see is that when expats come to India, many of them are on managerial roles. So that's a possible shelter that can be explored under the tax treaty. For example, the India-US treaty does not have the word managerial. Similarly, we have the concept of make available. Now, what make available in layman's terms means is that if knowledge is passed down to someone in such a way that the person is able to apply the knowledge received on their own, then the service is said to be made available. Now, there are many cases, especially if it's managerial, etc., where services are not made available. So, this language and this clause, if it is there in the tax treaty with which you're dealing with, that could offer a potential shelter as well. Take, for example, the India-US treaty has a make available clause, which can be, which is possible to seek shelter under that. But the India-Japan treaty doesn't have that language. So, just laying out some of those key parameters. Now, moving on from withholding tax and fees for technical services, is that all there is from a direct tax standpoint? The answer is no. There could be something known as service PE or permanent establishment under service PE. So that while this has not been something that has been coming about in the recent spout of rulings, this is a concept that came up and has been expounded in the Centrica ruling again way back in 2014. So here again, some of the things that need to be looked at, and which Akil and Karan have also talked about, are is there a lien on employment by the overseas company on the employee seconded to India? What are the conditions around the appraisal of the employee? Who has the right to terminate the employee? If some of these conditions point towards overseas entity, then there's a potential service fee exposure. Also useful to point out that some of the treaties have a mutually exclusive clause between fees for technical services and service fee. Now, what this means is that in the event the service qualifies as fees for technical services, we talked about some of the defenses, but that may not always work. So, in the event that it does qualify, you will not have a service fee exposure because of this mutually exclusive clause. For instance, the India-US treaty has this clause. So that covers some of the key direct tax aspects. Documentation and substance has been stressed upon quite a bit by Akil. What I can further say is that even stuff like emails, social media, what you're saying on social media, LinkedIn profiles, are also additional things that can be looked at by the revenue authorities. So there should be sufficient guardrails around the same. Moving on from there, now what is the approach around the litigation, or what is the approach that can be taken by the tax authorities from a direct tax perspective? So here there are multiple ways they can look at it. They could issue general notices under section 133(6). They can ask you questions during the course of your assessment, and also there's the potential of reassessment. Now reassessment can be two ways. It can be in the hands of the Indian taxpayer citing non-withholding of tax and questions around that. It can alternatively be in the hands of the foreign company saying that the recipient of the payment saying that you were taxable in India, however, you are not paid taxes, neither have you filed the return. So do all of that. So, and reassessment provisions have been kind of made slightly more onerous. Now it can go up to 10 years. So that's something that you need to be well prepared about. I think those cover some of the key direct tax points. What I can summarize and say is that please don't think that the story ends with GST. Direct tax as a whole is another nut to handle, so you need to kind of figure that out also into the equation. With that, let me hand it back to Krishan.
Thanks, Vijay. I think a very important point you mentioned about how direct tax can interplay with the indirect tax, and just story does not really end there. There is much more to it, and we need to be sure that we stitch the story all together, even from a direct tax standpoint. Now, since there are related parties involved, and in the interest of time, I would bring in immediately my colleague Vaishali here, who's a transfer pricing expert. So, Vaishali, what do you really look at it from a perspective of the to, the cross-border transactions which take place in this kind of this kind of an activity, where, what has been your experience on these kind of arrangement from a transfer pricing standpoint?
Yeah. So thanks, Krishan. So generally what we have seen is that employees may be sent to India either on long-term basis, short-term basis, or for the purposes of some trainings or exhibitions. So the last category is pretty simple, where they may come to India for certain trainings. There may be certain recharges which are levied by the overseas entity to the Indian entity. And generally, we would require certain supportings to demonstrate that it is the cost that has been recharged to India. And if these employees are coming from various locations, generally, certain cost allocations, etc., may be involved. And what is the basis of these allocations, etc., needs to be analyzed. At the same time, what is very important is the intercompany agreement that needs to be in place, because that becomes a starting point to understand the substance of the transaction. Now, Vijay touched upon the fact that certain employees may also be sent to India for short-term purposes. Now, if they are on short-term purposes, whether a service fee is getting triggered, in case that gets triggered under, that's where transfer pricing kicks in, and attribution of profits to the PE is going to arise, and you may have to undertake a benchmarking to demonstrate that what we have attributed to the permanent establishment is arm's length, undertake an industry benchmarking exercise and demonstrate that it is on an arm's length basis. Now, in case of long-term employees, which was the case here, now we need to analyze the agreements. Now, in case of OECD, it says that in case employees are sent on a very long-term basis, it should be akin to transfer of an intangible, and there needs to be certain payments which are due from the Indian entity to the overseas entity. So whether those kind of payments are getting triggered is something that needs to be analyzed. Whether there can be some restructuring undertaken to once the employee is on long-term payroll of the Indian entity to have a direct contract with the employee. If that is possible, to analyze whether a position can be taken that a transfer pricing is not applicable. But generally, these agreements are tripartite in nature, so that may be slightly difficult. Now, if salaries are being reimbursed by the Indian entity along with social security and other allowances, etc., generally we have seen that all these get recharged to the Indian entity on cost basis. So adequate agreement becomes a starting point which the tax authorities are going to ask you. And also all the cost reimbursements, whether supporting documents are going to be available to demonstrate that whatever you are recharged is on cost basis. So that becomes very critical. Now, for the purpose of GST, there is an important question whether what is the value that will be attributed. So generally, if there is a salary or cost which is being compensated, benchmarking of that salary is critical, whether you can demonstrate that that is on an arm's length basis. And since the charges have been recovered at inception, if that assumption is made, whether a position can be taken that this compensation of reimbursement is adequate and no further markup needs to be charged. So these are some of the challenges which are going to arise from transfer pricing. And of course, the answer will depend on the facts of the case, how the transaction is structured, and how the agreements are put together in place between the employee, the overseas entity, and the Indian entity. So, Krishan, over to you. These are certain challenges from transfer pricing perspective.
Thanks. Vishali, you mentioned a very important point about how GST looks at the valuation and how transfer pricing the valuation will be looked at, specifically in light of, whether it's an employer-employee relationship and purely a cost reimbursement, or there should be a markup which probably comes in because the valuation principles under GST ask for a, open market value if the value cannot be determined. And from a transfer pricing perspective, we still maintain the point that whether it qualifies as an arrangement of service or it continues to be a cost reimbursement model. So that's something which is very important for people to note as well. I'll bring back some of the questions which I've seen from the chat boxes, etc., and which I've gathered. Some of the more important ones in the interest of time, I'll pick up right away. And I'll bring in the first question back to Karan. Karan, you know that the investigations are going on, and we talked about the fact that many of the investigations started right when Northern Operating System ruling was issued. Some of them were there before that. So what could be the proactive measures the businesses could really take to ensure the compliance with law on one side, and specifically where some of them would have paid taxes and then the circular was issued post that, and some of the developments happened after that with the rulings were issued which were favorable?
Yeah, I think very important question, Krishan. Thanks for bringing this out. So, like I mentioned, we should proactively start revisiting our arrangements, the contractual terms. When I say contractual terms for all the kind of arrangements, whether it is a secondment agreement or it is employment terms, the policies for foreign company policies or Indian company policies, the positions needs to be seen and distinguished between from northern operating systems, facts. And of course, if the notices have been received and some amounts have been deposited, just track, I would suggest, just track the High Court decisions where the stay has been granted even post NOS judgment. While that was for service tax, the judge, the stay has come in for GST regime. So, and also we need to keep an eye on Komatsu India, Supreme Court decision, which might again touch upon secondment arrangements. And then probably a strategy can be drawn. One way to look at it is if somebody wants to be really conservative, pay up the taxes if the ITC is available. But again, that will disturb the position which have been taken for the past, and it could also immediately mean that interest implications will come in because of the time of supply, which typically would be at that point in time when the services were supplied under GST. So that's, that weighing has to be done. That strategy, has to be spoken to the lawyers or the consultants by the assessees, by the taxpayers. That is, what immediately can be done. But yes, we should be informed about everything. We should not be sitting and be surprised with some notices and slap off demands, because this can really hit very hard to the companies.
No, absolutely. And it's, because the issue goes back to almost 2017, it will be a big hit, specifically in relation to a tax demand plus the interest component as well. And, when looking at the structure and you start revisiting things going forward, one needs to be mindful that this can have a ramification on the past period as well. And you can't take away the past period unless there is a complete distinction which we can draw from Northern Operating System basis whatever circulars have been issued, or, are we able to really bring out that clarity, and also wait for the Supreme Court to give another verdict, which we are hoping for.
Absolutely. So one point, Krishan, I just want to, make, which immediately struck my mind. When I say revisiting the documentation, it primarily means what is the intent, what that secondment, arrangement means to the companies, foreign and Indian. What is the real benefit of that? So that should really come out. At times, in our experience, we have seen that the agreements are drafted very casually or loosely, while the actual activity is different, and the wordings in the agreements are different. So that also creates a doubt in the mind of GST authorities, where unnecessarily litigations will start, and then we start demonstrating that, okay, no, this was not the intent, that employee does this, that. So it should clearly, be spelled out in the agreements.
Right. Just to cover out and come out of Northern Operating System, not what you're saying is the way to start looking at documentation,
Absolutely.
but actually bring out the right intent if you really truly believe that Northern Operating System is not the case you are covered under. And automatically that comes us to also, come in and take a last feedback from, Akhil, Vijay, and Vaishali on that, from that perspective, because what they mentioned is that devoid of Northern Operating System, we still have views which continue to be applicable from an employee taxation, corporate taxation, and transfer pricing perspectives. Any last thoughts between three of you, starting from Akhil, you?
So Krishan, I think I'll take what Karan has just mentioned. I take that forward. I think it's to give a unique experience and best experience both to the employer and employee out of this secondment. The planning is the most important thing, and there, as Karan said, intent has to come out clearly. If a person is coming for a purpose, and accordingly the contract should be drafted so that there is no, per se unnecessary litigation both at the employer and employee's end going forward. And just to give one perspective here, one of my client into a liquor industry, they don't need to pay GST, but recently they've got a, as we said, that there's a huge liability which has come from a GST perspective because the secondment contracts are not properly drafted. They've not been worded the way it should be, and it gives a better experience both to employer and employer, and that's the key line. And we've seen a lot of good judgments coming after NOS, where they've given emphasis to the contracts, to the arrangements, and built up that employer-employer relationship and set aside what was considered in NOS as a manpower supply. It was considered as an employer relationship, and they've been given that relief. So again, planning and putting the contracts and having documentation in place is the key thing.
Maybe I can go next, Krishan.
Yeah, sure.
Sure. Just some housekeeping measures from a direct tax perspective, which I wanted to add on. One is that in case you end up withholding tax, you should also look at getting the tax credit overseas. So that may depend on the regulations in respect to overseas country. So that's something that needs to be evaluated. The second is that in case you end up withholding tax, that also triggers a foreign tax return compliance in India for the foreign recipient of the payment, and transfer pricing compliances as well. So that's another area that needs to be covered. The third is that typically we have a levy of equalization levy, which is a digital tax. Now, withholding tax and equalization levy are mutually exclusive. In the event you're not withholding tax, then you need to look at the applicability of EQL as well. Being a digital levy and this being a physical secondment, in a classic case, it should not apply. But again, the language needs to be looked at. And fourth is slightly digressing from a secondment perspective, since if you have a secondment related cross charge or payment, typically it's likely that you'll have other such payments as well, whether it's IT allocations, HQ cross charges, etc. So it might be prudent to even look at those and see what are the withholding tax positions you are adopting for that. I think those were 3-4 points I really wanted to highlight. And with that, I'll flip it back to you, Krishan.
Thanks. Vishali?
Yeah, so Krishan, as everyone alluded, it is very important that you have your agreements in place. And factually, what is happening should also be consistent with what agreements have been drafted. That is very critical. Apart from that, the purpose of the visit of these employees and the benefits that you are deriving from it, because the compensation packages and depending on the number of employees, the amount could be substantial. So documenting the benefits is something that we have been asked, and then benchmarking and undertaking necessary analysis. So those are some of the critical aspects I would suggest.
Thanks, Vishali. Thanks, Vijay, Akhil, Karan. I have gone through the chat box again, and seen if there's something more which has come. But there's only one question which I can probably see, the last one, which we can pick up. I think has come, which is probably the question is on the first question was on the whether maybe Akhil, promoters are also considered to be employees if they come to India on a secondment contract. I think the question sounds like, can they be considered as employees from the perspective of whether they're promoters or not? So the question could be answered in the perspective of a management person coming in from a parent company. Can that also trigger the similar implications? Akhil, would you take it up?
See, I think on the promoter coming to India, considered as an employee or not, again, totally depends on the kind of arrangement. And need to analyze more in detail. Premise if you ask me, they should not be, because they are the promoters and co-founders of the company. However, we need to give time and look into it. There are different factors which interplay, and basis that we can, if we get more details around this, we can address that.
Okay. The last question, I think we are on time. Karan, the question is that the employees on the payroll of the Indian company or the branch office and comes from the head office, pays all the salaries, etc., are paid by the Indian office. However, at the directions of the head offices, would NOS be applicable?
Yeah, I was just reading that only. See, again, like we said, whether it is a branch or a entity here, while these structures will change, for the branch import, if there has to be any import of service, if it qualifies for as contract, for service, then whether it is a branch or a company, the implications are same under reverse charge on the Indian company. However, if it does not qualify as employer, if it does qualify as an employer-employee relationship, again, the principles should apply to branch also. There should not be any difference between a company and a branch. And of course, that has to be again distinguished with the NOS. So obviously, answer to I think Manjeet Kaur is that please, we need to see your arrangements, how they are worded, what exactly, how the payrolls, etc., will be decided between foreign and Indian company, and what are the documents you're maintaining between branch and the head office. So in principle, the concept remains same, even whether there's a branch or a company.
Thanks. I think we are just on time now. Thank you so much for those inputs and insights to all of you speakers. And thank you for the audiences to be there till the end of this presentation. I hope it was helpful and gave you some, understanding in terms of it's not just a GST issue. I think we have to look at it from the perspective of the overall gamut of taxes and regulatory aspects around it, from a transfer pricing perspective, from an employee taxation perspective, from a corporate tax perspective, especially on the PE, etc., and look at it holistically and look at your documentation, which plays a very critical role in terms of determining where you stand in terms of these developments. And please track these developments. It is very crucial, and be advised on these matters. Look at all the documents and make them consistent across, so that your positions at for the past period, as well as what you believe in future, is something which you carry on consistently. Thank you on that note. And if you have any further questions, please feel free to reach out back to us. Our email IDs and our mailboxes are available here on the screen. You can scan this QR code and look at the website, and also put your queries on gtbharat@in.gtt.com. And we are also hosting a budget webinar very shortly, as the budget is coming up. So if you wish to participate, please feel free to participate and get us insight from the experts, as well as from our economists on the panel on the interim budget dialogue. It's an interim budget, but it will be important for you to note and give us insights. And we are doing that on 1st of February 2024 between 4 to 5 p.m. Please register. The links are available here, or you could also log into our websites and download the links and log in and register in advance. Thank you so much. Have a great evening, ladies and gentlemen. Thank you.
Thank you.
Thank you.
Thank you.